Hello and welcome back to the Geordie Pig Investor channel. Today we are going to go through my Trading 212 April portfolio update video. So we've had a turbulent last couple of days, hectic couple of days. We've gone from the portfolio flying over the last 8 months of investing since I first started. We've just been on an upward trajectory, as you can see, progressing slowly up into the nice percentages, getting towards 6-7% profits. And then we have dipped right down to only 3%. Why is this? Well, we're going to go through that today. We're going to have a look into the portfolio, see what's been happening over the last month, and I will dive a little bit deeper. So I've actually invested a lot of money over the last couple of days. If you see my last video update, I'd actually invested around £15,000, and now I am close to investing nearly £17,000 going into May. So we're now on to the 2nd of May this morning. So this video is a couple of days after May has started, but we're going to have a look through till the end of April, which is where I had £15,500 invested. And then since then, we've invested quite a bit. So we're going to take it to this point here, but actually have a little look further and see why my portfolio has dipped down to 3%. So over the last month, like I say, we started off at the start of the month having invested £11,500, and we ended the month investing £15,500. So it was my biggest ever month of investing, over £4,000, and obviously we've continued that trend into May. I just found so many good deals within April that I really wanted to get into the positions. I had the money and cash available, and I thought, why not? Let's just get in the positions, and hopefully over the long term they will pay off. So let's have a little look through my investments and see what's been happening. So my main investments this month I invested into were some big American and also UK stocks, but mainly American ones this last month. We did invest quite a lot into Diageo, as that is down for 6% over the last month. And I just believe that the price right now for Diageo is so good. If you haven't watched my latest stock analysis video, I did a full breakdown on Diageo. It's a stock that I've been buying every single week, putting £30 a week into it because I believe that it is such good value, and I've been doing that since the start of January as a challenge that I'll do through to the end of the year. And I'm really glad that I've been doing that challenge, and kind of happy to see it in this little bit of a negative because it just means I can buy even more into it. So the last week I actually got, I think, nearly 4 shares worth. I'll probably continue to buy into this position if it dips even further. So we can also see that I added a couple of positions this month, being Games Workshop and also Greg's. So they're totally new positions. We also added a UK REIT into the portfolio, which is Safe Store. And again, that one's actually performed quite well so far. So we can still see across the portfolio, I only have 7 red positions as of right now, out of about 37 positions I think I currently have. So we've got 30 positions within the green and only 7 in the red. But we can see, if you just saw there, that main position that has dragged me down over the last 2 days is Starbucks. What has happened to Starbucks? Well, it was cruising along around about that $87 to $90 mark. It was creeping back up towards $90. And then their earnings report come out and it absolutely plummeted down. So literally on the 1st of May, it just crashed right down and it dropped right down to $78. I thought that this would be the lowest point it went to, so I loaded up into Starbucks. I will show you now how much I ended up buying. As again, this is a transparent channel where I show you absolutely everything and I'm not afraid to hide anything. So if I scroll down here, we can see it's actually at $79. So just under $80, I felt it was too good a price to pass up. I actually ended up loading up £800 worth in at this price. So we can see that at £750 there. And then I actually put a further £50 into the stock again at a very similar price. And then it just continued to plummet down. Now, I've also done a stock analysis video on Starbucks a few weeks back, and I also have had another look into the numbers, and I still believe it is at great value at $90, never mind $75. So since it's dropped even further, I then added an extra £250, buying in at $77, then buying in at $76.50, and then buying further in at $75.75. It's currently now sitting at $75.22, and if I've got the funds available next week, I may add a little bit more here, because like I say, the position's now down 10%, so I'm down my biggest ever amount that I've seen, over nearly £200. I'm not scared of this though, guys. This is part of investing. It's what we want to be seeing really in stocks that you're confident in and comfortable with. when they dip to prices like this, it's just a better opportunity to buy in, and I'm taking advantage of that. I've been buying in a lot of money into it. I've over doubled my position now. It's my biggest position in the portfolio now, and I'm going to continue to buy in if I've got the money there, like I say, and I'm still confident in the stock. And that's the main thing, guys. Only buy stocks that you've researched and you're confident in. If you're confident in that stock, then you're not going to have a problem buying in at a price that you feel is fair and valuable. So yes, that is why my portfolio has dipped so much. As you can see, this position was pretty much level, and it has now put me down £200. So I've gone from being up over £700 in total, which was about a 5% return, to now being down to only up £500. I'm only up 3% returns. The ETFs have been performing pretty bad this month. So the FTSE All World and the S&P 500 alongside the EQQQ Nasdaq fund have all dipped massively this last month. We can see they're down 3%, 2%. A month it is down 3.5%. So that's quite big dips for the big ETFs that I do have. And again, I've been massively buying into these. So rather than putting my usual £100 dollar cost average every Monday, I doubled it and been putting in £200 dollar cost average every Monday. And then I actually opened up some separate positions within the EQQ Nasdaq and added in some money there. I think I bought around about £300 of the Nasdaq alongside Visa, which took a massive dip. So I've been buying a lot of Visa, and also my MasterCard position has massively increased. Again, this has dipped huge over the last month, down nearly 8%. So I've also been buying in a lot of MasterCard, as I believe these two companies are massive long-term holds for myself, and I believe they're at such good value as it is right now. It's too much to pass up on. So I'm just so glad that I've got a cash position available to have been able to take advantage of these positions and actually buy in at these great prices. This is another reason why I find it is so important to try and have at least 5% of your portfolio in cash, if possible, so that when these opportunities do arise, you can take advantage of them and really get that money into the market when it is at that better price. We're currently in a fear market as well. It's not at extreme fear yet, but it is at fear, which is again a good sign to buy in. People think you want to be buying in when the markets are all high. It's the worst way to do it. Would you go to a shop and buy an item that's usually £100 and they're selling it for 120? Or would you want to buy that item when it's on a discount, 20% off, and you can get it for £80? That's what you've got to ask yourself, and that's what you've got to ask yourself about your stocks as well. So yes, I am down now over the last couple of days and took a little bit of a dip, but as I've explained, this isn't a bad thing, and it just means I'm able to create more opportunities and buy in at better prices. So it kind of excites me. So these are the stocks that I've been buying over the last month. I'm hoping that I'm going to be able to continue to do so. Probably not as quite aggressive rate, putting in £4,000 over the last month, as I would soon run out of money. I wish I had those types of funds available all the time, but I'm glad they were available for this last month while the dips were there and I was able to take advantage. I'll also mention I invested quite a lot of money into Vici properties over the last month as well. That was more towards the start of the month when it was down here at $27. Which brought my average price right down. So I'm now actually into the green for Vici, which is nice to see, as it is a really good long-term dividend payer and dividend grower. So I hope you enjoyed this portfolio update. You can see all my positions here. We are still up money, but like I say, it's about finding those opportunities and getting in at the prices that you're happy to pay. So I'm really happy with how the portfolio is looking. I'm closing on that £17,000 mark. Hopefully £20,000 is just around the corner and I'll be able to achieve that within the next couple of months. I hope you enjoyed today's April update video. If you have any questions, let me know in the comment section down below. What stocks have you been currently buying? Do you think Starbucks is at a good value price, or do you believe it's still going to drop even further? Let me know in the comment section down below. Please like and subscribe if you haven't already. And this is the Geordie Pig Investor, over and out.